$1 trillion. That is the magic number. It is the valuation target for SpaceX, and surprisingly, the potential cap for OpenAI. But here is the paradox. One is conquering the stars with proven hardware, while the other is burning $13 billion a year in a digital furnace. Welcome to the prelude of 2026. This isn't just a year on the calendar. It is shaping up to be the battlefield for the most spectacular IPOs in modern history. Elon Musk and Sam Altman are not just taking companies public, they are selling as the future. But why now? Why does an AI company bleeding cash need the public market so desperately? And is this the start of a new technological empire, or the peak of a massive speculative bubble waiting to burst? If you want to navigate the fine line between opportunity and financial ruin, make sure to subscribe and turn on notifications. We analyze the power plays others ignore. In this video, we dissect the fragile economics of OpenAI and Anthropic, compare them to the ironclad fortress of SpaceX, and reveal the real winners of this trillion-dollar race. Let's dive in. The AI paradox, the cash burn. Let's start with the elephant in the room, OpenAI. The valuation figures are staggering up to $1 trillion, but the fundamentals tell a darker story. Currently, Sam Altman's empire is projected to lose $14 billion by 2026. Why? Because training next-generation models requires a level of compute power that eats capital alive. They are renting intelligence, but paying a landlord named Nvidia. It is a business model built on the assumption that the SpaceX fortress, the hard asset. Contrast this with SpaceX. While OpenAI sells digital promises, Elon Musk is moving atoms. SpaceX isn't just about Mars, it's about the monopoly of low Earth orbit. Starlink is already a cash-printing machine, financing the massive R&D of Starship. Unlike the fragile unit economics of AI chatbots, SpaceX owns the infrastructure, the vehicles, and the service. It is a vertically integrated fortress that is nearly impossible. The exit liquidity event. Why 2026? So, why 2026? This is where the geopolitics of finance comes in. Venture capitalists and early investors like Microsoft and Thrive Capital have been sitting on paper gains for years. They need an exit. 2026 is calculated to be the Goldilocks moment. Interest rates are expected to stabilize, and the AI hype cycle will be at its peak maturity before regulation strangles it. They are preparing to hand over the bag. The trap bulls vs bears. This brings us to the risk. The market is pricing these companies as if they have already won. But remember the .com bubble? The technology was real, but the valuations were fiction. If you buy into the OpenAI IPO, you aren't just betting on technology. You are betting that they can solve their energy and hardware crisis before the money runs out. It is a high-stakes gamble between a technological utopia and a financial black hole. The verdict. So, who actually wins in this trillion-dollar race? History favors the builders of infrastructure over the merchants of hype. SpaceX is building the railroads of the 21st century, while OpenAI is trying to sell tickets to a destination that doesn't fully exist yet. The smart money knows that while AI is the future, hardware is the leverage. The big picture geopolitics. Ultimately, 2026 will not just be about stock tickers. It will mark the moment when private corporations officially eclipse nation-states in power. When one man controls the orbit and another controls intelligence, the IPO isn't just a public offering, it is a coronation. The question isn't whether you should invest. It is whether you are ready to live in their world. The financial landscape is shifting beneath our feet. If you want to understand the geopolitical chess moves behind the headlines, you need to stay ahead of the narrative. Like this video if you value deep analysis, and comment to O6 below if you think the AI bubble will burst before the IPO. Don't forget to subscribe. I'll see you in the next one.